India has only one fund that tracks the MSCI World Index. It is the Axis Global Equity Alpha Fund of Fund. The catch here is that it's been quietly underperforming its benchmark over the last 5 years. And to make matters worse, it's charging a very high expense ratio of 0.9%. And only a very few number of investors know about this. So in this video, I'm going to break down three things about this fund. And I can't wait to get to the third thing because the third analysis about this fund will literally blow your mind. So, what are those three things? First, we will discuss why a fund like this is important to the Indian ecosystem. Second, how this fund has performed since the inception of this fund compared to its benchmark. And the final thing, which I can't wait to get to, is this fund is a fund of fund which is holding an European fund. Recently, Phenomenal launched a global product that means that you get access to all the securities across globe. So we will go in depth into this European fund and analyze how this fund has performed because this fund has a 20-year track record. So that will give you another sort of in-depth analysis. So let's start with the first analysis for this video, which is why a fund like this is critical to the Indian ecosystem. So as the name even suggests, right, Axis Global Equity Alpha, it's a global fund. So what is the point of having a global fund is to get access to all the stocks across globe. So why index investing or passive investing is famous is because it eliminates single stock risk. It's very hard to pick single stock. It's very hard to be a stock picker, right? So you basically diversify your risk across many companies and you choose an index fund. But the problem here is that when you choose most passive funds in any country, you're exposed to that country. So, for example, let's say you go to the US, you have S&P 500, right? And S&P 500 has what kind of stocks? It's the US stocks. If you come to India, most people invest in the Nifty 50, and Nifty 50 has what kind of stocks? It's the Indian stocks. Same story applies to almost all the countries, right? If you go to Israel, if you go to Australia, if you go to Canada, if you go to the UK, right? Everyone has home bias, which is very detrimental for the chart that I'm going to show now, which is this one. So countries go through a lot of cycles, right? Similar to how it's very hard to be a stock picker to pick one stock that's gonna give you returns. It's also very hard to be a country picker, right? Because you don't know which country is going to do well. Any country can go through cycles. Any country can go through decades of underperformance. It's very hard to predict what's going to happen in the next 10 years, 20 years, right? India might have all the right prospects for the future, but no one knows that it's going to deliver this much return. Same for the US, same for any country, right? So that's why a global fund like this is very critical, and it's so sad to see that there's only a very handful of funds that gives you exposure to the global, like to all the stocks across globe. So what we are seeing in this chart is basically how different countries have gone to losses over the last 100 years, right? So for example, let's take the famous one, which is the US Great Depression during 1929. Between 1929 and 1932, the US market had a drawdown of 85%. So if you had, let's say, 1 lakh rupees, right, it would have gone down to 15,000, right, which is not great, right? So having exposure to just single market would have made you lose a lot of money, and this is a problem across globe, not just Indian problem or like US problem, right? Across globe, everybody has they all have home bias. Now that we have covered the basis for this fund, why this fund is important, for Indian ecosystem, the invest for especially for the investors to get global access. We will next dive deeper into this fund and see how this fund has done compared to its benchmark, which is the MSCI World Index fund. Mind that this is not actually tracking the MSCI World. This is a alpha fund, meaning it's an active fund, so it's supposed to beat the MSCI World Index fund, right? And there you go. The performance of this fund has not lived up to its expectation over the last 3.9 years, right, which is a shorter time frame we are talking about. But we will get into the third fact, which now I'm really eager to show that analysis to you. So over the last 4 years, it hasn't done well. It has barely matched the MSCI World Index returns, and you can also see the excess returns. Right, it has been like quite negative over the last 4 years. So now that we know that this fund hasn't done well, as it lived up to its expectation, by charging 0.9%, which is a lot compared to its benchmark, which is charging only 0.2%. That's a huge reduction in fees. So whenever you see a fund that's charging more than, I don't know, 0.5, 0.6%, especially for an equity fund, it's difficult to generate alpha over, I don't know, n number of years, right? It's very difficult to do it consistently over long term. And who gets, all the downside effects of having a high expense ratio fund? It's the investors, it's the end customers, right? So now that we have covered two things, right? One is why this fund is important and how this fund has done well over the last 4 years. Now we will get into the fund of fund, that is the fund that this Axis Global Fund is holding. So if you go to their website, you can see that at the bottom they have given what fund they are holding, right? Which is the Schroder ISF Global Equity Alpha Fund. So the Global Equity Alpha, the name comes from this fund itself, right? So since we are in the global market, so Phenomenal recently launched global market, you can literally search any fund across the globe, right? You can search any European fund, you can search any US fund, you can search any Australia, Canada, Israel, any funds across these countries, right? And obviously India as well, right? So what I've done is, instead of analyzing the Axis Global Equity Fund, I'm going to analyze the underlying holding of this fund, which is a Luxembourg, which is in the Luxembourg fund, which has a history of last 20 years, right? It starts from 2005. So we can go back over the last 20 years and see whether this fund has actually delivered what it's supposed to do compared to its benchmark. So I've also loaded up the MSCI World Benchmark Index. Mind that this is a index, it's like simply a return. So this is not actually a fund, it's an index, right? We can also compare it with an actively, like with a trading fund in about some time. So just comparing this fund to its benchmark over the last 20 years, again the same story follows. It has brutally underperformed its benchmark, and the reason being is, can you guess the reason? The reason is the high expense ratio. You can't. It's very hard to outperform a simple benchmark, a powerful benchmark like MSCI World Index consistently over long term by charging a high expense ratio of 0.83%. So it's very hard to consistently do it over long term, right? So just to show you, uh, you know, the fund, which is actually not trading, right? So this is again MSCI World ETF, which is trading in the US market, right? So now we are comparing three different things. One, we are comparing a European fund, which is the Schroder ISF Global Equity Alpha Fund. Second, we are comparing returns, basically the index. Third, we are comparing a US fund, which is the green line here we are showing. Again, the same story follows, right? So the returns are a bit lower here because obviously the the third one, the URTH fund, is charging an expense ratio, right? Whereas the index itself doesn't have an expense ratio. So you can see it has an expense ratio of 0.24%, which is massively lower than 0.83%. Now that we have seen over the last 20 years that this fund hasn't performed, hasn't lived up to its expectation, I'll tell you one of the reasons, right? One reason obviously is the expense ratio. Second reason is the concentration risk. So here you can see the number of holdings, right? So it's 73 holdings compared to the URTH, which is the World Index ETF that is actively trading, right? Which has 1,500, which is much more diversified than the very concentrated Schroder equity fund, right? Obviously, they're trying to, outperform by picking the stocks across globe, right? The even more bigger problem is the concentration risk, right? So if you see that the Schroder fund has about 7% into Microsoft, about 5% into Google. So these are like single companies we are talking about, right? And it has a huge exposure to these companies. Same can be said for, MSCI World, but it is much more diluted than this Schroder ISO fund. So you can see 4% compared to 7%, 1% compared to 5%. So much more diluted, and you are not picking any stocks, right? This is an index fund which automatically diversify your risk. In this video, what we have seen is like three things why this kind of fund is important to the Indian ecosystem, and how this fund has performed over the last 4 years. It hasn't done well compared to its benchmark. Third, we took the underlying European holding of this fund, and even that fund over the last 20 years hasn't done well. And more importantly, the reason, one of a few possible reasons why this hasn't done well is because of the high expense ratio and the concentration risk into only a few companies. So isn't that amazing that you can literally analyze this fund as well as the underlying holding of this fund, which is trading in Luxembourg, right? So I think that brings to the end of this video. So before I end this video, if you're watching this, obviously you're interested in understanding more about funds and portfolios, analyzing them, right? You've seen the analysis. There isn't any tool out there which helps you do this so easily, so quickly. So it's phenomenal, is so easy to use, and it is built for advisors, mutual fund distributors, and portfolio managers, especially not only for India, for global investors, right? So you get access to all the 7 to 8 markets that we have in our platform in global. So especially if you want to go in depth into a fund like this, which is a global fund, which is holding another fund from Europe, there's no software, there's nothing out there that can help you understand and analyze the intricacies of these funds in depth. So I don't know what you're waiting for. Come to phenomenal.com. You can register. The tools are free to use. You can come and analyze any portfolios and funds. And if you want a demo from me, I would be happy to give you a demo as well. Thanks a lot for watching. I will see you next time with another interesting fun. Thank you.